Bob, great to have you on the show. Thanks for joining us this morning. I do want to start there with the so-called meme mania and the fact that we have seen a number of Wall Street notes just in the last couple of days talking about retail investors getting back into the market in a more meaningful way, largely piling into risky assets, what are considered risky assets, like, for example, some of these meme names or cryptocurrencies or speculative tech, if you will. Your thoughts on this?
Yes, well, one, thanks for having me here today, Morgan. So the first point I have to make is this is no way analogous to what happened a year ago. When you look at the dollar inflows to AMC yesterday, it was $47 million. So that's reasonably important, but truly not significant. So you have some interest, but nowhere near the interest you had a year ago. Obviously, this was triggered somewhat by the announcement of getting into the gold mining business. And myself, as a person who ran operating companies for a long period of time, you always wanted to diversify, but you diversify where 1 + 1 = 3, where you're diversifying from strength. So if you go from AMC going into gold mining, that's not diversification of an operating company. That's more like a hedge fund, which makes multiple investments there. So I think that is probably also the reason why you don't have the great demand you had a year ago.
The fact that the SEC is taking a closer look at short selling and disclosures around that where hedge funds are concerned, it's taking a more critical approach to protecting retail investors, whether it's on this front, whether it's in terms of SPACs as well. I guess how do you see the regulations continuing to evolve, and are they going to make this market more friendly for retail investors or potentially add more hurdles?
So I would say this, when you look at societies at different point in time, they have different risk appetites. Certainly the last one we saw where there's tremendous or heightened risk appetite was back in the dot-com era. And it's not the job of regulators to really regulate what the risk appetite of society is at that particular point in time. But clearly they have to be in the business of providing as much transparency and information so investors can in fact make informed decisions. So any efforts by the commission to do that I think is fundamentally important. And when you look at the SPAC marketplace today, the big controversy is you can give 3-year projections. So to me, that's good. That's additional information. But that information has to be grounded in reality. And the one thing I know, again, running companies for a long period of time, your annual budget, your projection is always wrong, right? You never nail that number. So you can't expect the SPACs to do that. But they should, I think, and this would apply also, I think, to standard IPOs, give the projections, but give a range of outcomes, a base outcome, an upside, and a downside. And then if you see a SPAC company miss the downside by a significant amount, then you might have cause for action against those people who put those numbers out. Don't expect them to hit the base case number, but if they miss the downside number, which has to be done obviously with proper care, then you have some kind of issue.
Hey, Bob, I wonder how you're thinking about, we just talked about memes and that rally, just talked about the SPAC crackdown. We haven't even mentioned the momentum of delisting some Chinese names as we get Baidu perhaps today added to the list. How do you think about those various buckets of regulatory pressure that we're seeing right now?
Well, certainly this issue's been around a long time. It was there actually before I came to NASDAQ, which was a long time ago. So it has to be resolved, and it has to be resolved well. So tying back to my earlier theme, investors need to have transparency. They need to have information. And so to have Chinese companies that are not providing similar information to a listed company domiciled in the U.S., that has to be corrected at some point in time. So my hope would be you'd see cooler heads prevail. They'll come to some compromise that will not leave American investors in some disadvantaged position when a company is based out of China or from the British Virgin Islands.